Dealbox Daily, episode 17. I'll be your host, Brendan McShane, and we are here to go through all the latest crypto and blockchain news so you don't have to, coming from blockchain, digital assets, fintech, and private placement. Alternative investments and category design coming from Dealbox. So listen to the live, watch the live stream, listen to the podcast, and read the blog. If you want to learn more about Dealbox, go to dlbx.io, and here we're Episode 17, and jump into Article 1. MicroStrategy announces new Bitcoin buy worth $177 million. The purchase was disclosed Tuesday. This brings MicroStrategy's total Bitcoin supply to 108,992 Bitcoin, an amount worth approximately $5.3 billion at the time of press release. Sailors said Tuesday morning that the company has spent $2.9 billion at an average price of $26,000 per Bitcoin to attain a digital asset. Here's the chart below as we can follow the companies when they started purchasing the Bitcoin prices. They started at 11K on average and they purchased 21,000 Bitcoins. And now they are holding 108,000 on average purchase price of 26,000. So they have definitely made a hefty profit of around $1.2 billion. I think MicroStrategy is going to keep more money on this too. And they're going to have to pay taxes on this. Depending on how long they hold it for, it could be capital gains tax, but it's still too early. They have to wait until September before they can start selling out their first ones for capital gains tax. DeFi exchange SushiSwap builds on Avalanche as part of the $180 million incentive program that Avalanche also launched a few weeks ago. The popular decentralized SushiSwap is the latest decentralized finance project to join the $180 million incentive. Avalanche Rush has already attracted lending protocol Aave and an automated market maker Curve. Avalanche is a proof-of-stake blockchain that was built by Ava Labs. It claims to process 4,500 transactions per second without the security trade-offs that are usually associated with blockchains that can transfer data quickly. That is, wow. That is a lot of transactions per second. But what they're trying to get into here is a lot of yield farming is a big one that's coming up with Avalanche. If you can go on to Snowball or Yield Yak or any of those platforms, and they have some crazy returns on them for APYs that keep getting compounded back into themselves. I guess SushiSwap is also going to join that wave. And Avalanche has been up 300% in the past few days. They are just launching new project after new project, and this new incentive program is just drawing more attention to their platform in general. More lifting news, Dogecoin is going to help Real Dogs. Chicago Animal Shelter now accepts crypto. In a Tuesday announcement, Paws Chicago said it would be accepting Bitcoin, Ethereum, Dogecoin, and other tokens to support its operations ahead of its new hospital for homeless cats and dogs. The organization is hoping to target a tech-savvy demographic of potential donors, promoting crypto donations with digital billboards, including the dog shooting lasers out of its eyes. I gotta zoom in on this one. This is this is great. I love this art ad. You walking down the street, I think this would definitely grab your attention. I mean, you just see that, a dog just shooting laser out of its eyes. It looks kind of like Superman mixed with Air Bud. But I can see, I mean, the crypto community has made massive donations before. With FTX making big donations, Kraken's made big donations, and I think other companies will be making donations. And this is one of the ones where they're just hoping to reach out to the Doge community who have made some crazy gains in the past year, hoping that will actually go to save dogs, which unfortunately they said here that the homeless dogs in the Chicago area have a kill rate of 91%, which is very sad to think about. So hopefully that this funds actually will go to something useful and, give dogs a better life for the Doge. Solana-based DeFi protocol Luna yield reported rug pulls investors, 6.7 million taken. The world of DeFi has reportedly seen another rug pull, but this time in Solana blockchain ecosystem, according to numerous reports. If you go on their website, the Luna yield has a 404 error. The Luna yield team to start with was anonymous, and the project developers allegedly got with 6.7 billion, according to CoinDesk reporter Sebastian Sinclair. And the SolPad project will return 60% of the purchased amount to all those that were lost. It would be compensated in USDC. So here's just basic math breakdown of what 60% is. But a rug pull is the most common crypto fraud that occurs. Basically, you have a liquidity pool and you have one new token, and the new token will be made by a project like this. and they'll put it with something like Bitcoin or Tether, an established, already made token, and they'll put them both into a liquidity pool, and then they'll build the pool up as much as possible, and then all at once they'll take their huge wallet. So this is something you can look out for, is just see how much one wallet holds in a certain currency, especially if it's new like this. They'll take all of their currency and they'll just dump it into the liquidity pool at once and just drain it of all of its Bitcoin or Tether or whatever it's being matched against in the pool. Take it all out. The coin becomes worthless because of just such a price crash, and then they just run. It is definitely one of the problems to look out for, and while it's very difficult to see, one of the main ways to look at it is to definitely take a look at the wallets in general and just see how much one wallet, a few wallets can control, and just look how big the whales are, especially on new projects. Experts are warning though that this could be possible with Cardano when they've started doing yields and yield farming and staking, and rug pulls are again something to always look out for as a common crypto scam. Althea AI raises $16 million in private token sale for intelligence NFTs for the metaverse. Althea AI created the intelligent NFTs, or INFTs, has raised $16 million in private and restricted token sale to a group of game and crypto investors. The company is creating what is considered to be an underlying AI infrastructure for INFTs, or intelligent non-fungible tokens, something new, on the path of the metaverse, the universe of virtual worlds that are all interconnected, like in novels such as Snow Crash and Ready Player One. Althea believes that the NFTs will provide a definitive property rights infrastructure for the emerging metaverse, driven by interactive and intelligent avatars. The AI infrastructure built by Althea, that's how you pronounce it, will serve as the underlying connective tissue to enable NFTs to come alive as an interactive media of assets with personality traits, preferences, and real-time interactive capabilities. This has a large use case compared to Ether Rocks, which, as I'm sure if you follow it, they have been selling for crazy prices, and it's just a picture of a digital rock. But these are avatars. They're going to be placed into the metaverse. Now, the metaverse is virtual world AI, as they said before, kind of like Ready Player One, where games are being played on it. Facebook is making a big push for the metaverse with their Oculus. PlayStation also has their own VR. Xbox has their own VR. So they're all pushing into the metaverse, seeing if this will be the next big wave. These NFTs can become, I think, more valuable. It seems like they have more use cases to them. If they could be used for games, have more come-to-live factors and more interactive, especially if there's an AI behind it. I don't know exactly what that means. Maybe it's more interactable, kind of like a non-playable character, something in a game. But this is one I think that's worth following. This is a different NFT project, and I guess they're dubbing the new INFTs as intelligent non-fungible tokens. And I wonder if other companies are going to try and start following this as NFTs get more and more complex. And also another thing I'm really curious about, what are the gas fees for this thing? They must be astronomical. Because gas fees right now, if you're on the Ethereum network and you're trading over OpenSea, I mean, they can sometimes hit the $60, $80. Polygon will hit around like a few bucks if you're still on OpenSea and using Polygon trading. But I mean, I don't know what this is built on, but yeah, I couldn't imagine if you make it even more complicated than a PDF of a rock, how INFTs gas fees will be. But that's a problem that we solve for the future. Tune in, though, to our next episode, Friday, August 27th, and I will hopefully see you then.